live on Facebook with my friend Melissa Gonzalez, who's a financial planner with Northwestern Mutual. She pretty much serves professionals all around the world. And I know I've been getting a lot of questions from friends and clients who just want to know what's going on, what should they do with their loans, whether it's a student loan, a mortgage loan, and what better way than to ask somebody who has more knowledge. Melissa, hi, welcome.
Hey, Amy, thank you so much for inviting me today. Super excited to be here. And of course, answer the common questions that you're receiving from your clients or peers or friends. But thank you, super excited. This is the first Facebook Live that I'm in.
Oh, mine too. So hopefully everybody gets some benefit out of this. If you have questions, I know I've been already getting some questions through email once I started posting that we were going to go live. So I already have questions for you, Melissa. But
Great.
Whoever's on the call or on Facebook, if you want to just add them to the chat or add them to the Facebook, I'm going to be monitoring them. So my eyes are actually going to be all over the place. So actually, Melissa, one of the questions I get asked a lot is about student loans. People, should I pay my student loans right now?
That's a good question. So it depends. So there's federal student loans and then there's private student loans. Federal student loans right now are your payments are being deferred until September 30th of this year. So payments start again in October. So we don't need to make federal student loan payments right now. We don't pay the interest and there's no penalty or fee for not making your payment right now. Then there's private student loans. Private student loans don't fall under that rule right now with the CARES Act. However, some private lenders for student loans are also doing that. However, there's not like an all-inclusive list as to who is actually helping people in that manner. So the best thing to do is to call, if it's a private student loan, to call the private lender and see if they have options, and they might be able to. So so the question was though, should you pay your student loans? So if the person, so let's just assume you're in a position where you have been impacted negatively negatively financially due to COVID-19 layoffs, reduced hours, whatever it is, then it probably makes sense not to make that payment if you have those financial restraints. Let's just assume you're not negatively impacted. We're still working, maybe we're working from home, maybe you're working a little bit more based on the industry that you're in. So you're still receiving the same amount of income, but let's just assume maybe you have high interest credit card debt. So what you can do if you're not negatively impacted, you can pause those student loan payments. Let's assume until September 30th. Let's just assume it's $500, and you put those $500 to your credit cards to accelerate paying those off a little faster for the next few months, and then call it October's student loan payment. You just continue. So that's one way. Another way is you can put, again, the example is $500. You can put those into savings. If you're in a position to invest those dollars. So I'd say the answer is it depends. There are many ways to answer that question. I'm happy to talk to you or to the person that asked you that question as a one-off, just to see what that might look like. Okay,
great. That's some great advice, especially if you can use that money somewhere else. That's awesome. Let's see. I think one of the other questions was, should I defer my payments, which you kind of already answered. Let's see what else questions have come up. What is the deadline to complete 2019 tax returns? I know that's been pushed out, so that was one of the questions I keep getting asked.
Yeah, so this is not common, but it's been pushed out till July 15th. July 15th, so you're still okay to file your tax returns, and the IRS is stating that if you are owed a refund, you should still get your refund. So some people are a little concerned, like, is it too late? Am I even going to get money back? You should still get your tax refund if you qualify for one.
Oh, perfect. Okay, sounds good. Let's see some of these other questions. What about if I'm self-employed or a contractor? Do I still qualify for unemployment? That's huge. That's been asked quite a bit.
Yeah, that's a good question, and the answer is you typically would. qualify for unemployment. So you would need to apply as soon as you can with an EDD. So you can either be part of the partial unemployment or full unemployment. And then also there's other special programs for self-employed individuals, business owners, or contractors, for example, for some help too, under the CARES Act. So you should apply. It doesn't hurt to apply.
The worst I could say, I guess, is no, and then but why not, right? Because there's a lot more leeway these days, I would imagine.
Correct. So for sure, the state is very, very busy, very backed up right now. So if you don't hear an answer relatively soon, that's pretty normal right now. You can just imagine how many people applied, even for like all these other loans right now that are available, with these special loans available right now. But definitely recommend to apply. Worst thing happens is the answer is no. However, for again, self-employed individuals, contractors, business owners, there are some other options out there.
Okay, great. Here's a question that came in. Client asked for a 3-month forbearance, and Bank of America sent bill for increased mortgage with the next 2 payments. Can she do something about it? It's a B of A loan on her mortgage. Okay,
so what forbearance, and maybe you can chime in on this, Amy, but what forbearance means with a mortgage is that you're simply not paying for that mortgage for that month. However, you will owe that money as soon as forbearance is completed. So let's just assume in this example, the individual has a loan, whether it's B of A or any lender. I don't know, loan is the mortgage payment is $2,500 for the month. We didn't pay April, so that means May we technically owe $5,000, and May, June we'll owe $7,500, right? And then once forbearance is over, the lender is going to give that person a few options on how to go back to normal. So they're either going to, I believe some lenders have the option to continue the forbearance, extend it. Some of them are going to say, hey, you just need to pay everything back to get your loan back to normal. So we would have to, assuming that in July, it's like, okay, your $2,500 is due plus the 3 months we haven't paid. So that's why that individual is probably seeing that the payment increased, probably. So I personally cannot do anything about that specific piece. I would strongly recommend to work closely with your lender. And right now, banks, lenders are being, they have high call volumes for sure. However, they have dedicated teams to help people during this time. You may want to speak to someone like Amy and her team with lending options, just to see what else is out there. Again, there are options. Before making a decision, I strongly recommend to talk it out with the professional. I would assume right now for this case, a lender and your realtor, just to see, exhaust the options, and what does this decision today, how does that impact you 3-4 months from now?
Yeah,
because we don't want to be surprised.
Yeah, exactly. And I'm also advising clients is talk to your lenders, understand what that forbearance is before you accept it. Because one of the key things that I'm seeing is that people will accept the forbearance and might help them temporarily, but that forbearance may prevent them from refinancing in the future. So not just ask about immediate relief, but how is this going to impact your credit score? How is it going to impact your future for any refinances? And part of the question was the increased mortgage. Yes, that money is going to have to be paid somehow. It's still going to have to be paid back somehow. So find out, I would call the Bank of America again and find out what your options are. If you haven't already accepted the forbearance, make sure before you sign off and you agree to anything, ask as many questions, and feel free to reach out to me. I'll give you some of these questions to ask your bank before you accept it, and how it's going to impact you positively and negatively. But in this person's case, I would recommend calling the bank again and say, hey, I can't pay this increased mortgage. What else can you do? Give it a try. I mean, be insistent with these banks. Reach out to your lender. And if you have lost contact with that lender, reach out to me. I have some great lenders that are more than happy to help and kind of guide you through some of these scenarios.
Awesome.
All right, let's see what other questions have come up. I have a couple different places that I kind of look into. Oh, here's a question. Should I withdraw from my 401k plan?
Okay.
That's a great question right there.
That's a really good question. And it would depend. The normal answer is do not withdraw from your 401k if it's not for retirement needs. So a 401k would normally have a rule where we cannot withdraw until we're 59 and a half without a penalty, without a 10% penalty. Right now, that rule is waived. So what's happening is many people are saying like, well, we can technically withdraw from our 401k right now. That's true without the penalty. However, there can be that long-term negative impact. So withdrawing from a 401k should be the last option that someone takes or someone acts on to pay like living expenses, whatever it is. And the reason why is that right now the market, I'm pretty sure everybody has heard that the market has taken several dips in the last month, a little over a month. So what's happening is that the value of the 401ks, assuming it was invested in a moderate, balanced, very aggressive way, probably saw a dip. So let's just assume someone's 401k was valued at 100,000 before COVID, and then it's at 70,000. And we're saying like, let's just go withdraw. I'm exaggerating, but let's just withdraw the 70. At that point, we're withdrawing when the value has decreased. So we've accepted the loss. We don't lose money in investments until we actually act on the withdrawal.
Yeah.
So for individuals that are maybe considering withdrawing from a 401k, I'd be happy to talk to them, or I would recommend for them to speak to another financial professional to discuss that, to see what are the options, what are the implications to them as well. And also it does affect your income as well, your reportable income. If you're withdrawing from a traditional 401k, that money, you haven't paid taxes on that. So if you withdraw from that, so that's for a traditional 401k. If you withdraw from that, you will have to report that as income because we didn't report that maybe last year, 2 years ago, 5 years ago. So you will report that for your 2020 taxes. But if withdrawing from a 401k just has a very long-term negative impact, and the reason why is that the market historically corrects itself. So when there's a dip, historically it corrects itself. It'll go back up. Normal time frames about 4 to 5 years for a correction to officially correct itself. So imagine those in that example, that $70,000, the 100 went to 70. If we don't withdraw from it, it'll go back up. It'll go back up. So the best is to not. However, there are extreme circumstances where you might just have to. But I do recommend to speak to a professional before making, like you said earlier, Amy, looking at like the current impact, but what is the long-term impact? And I think sometimes we forget that the withdrawing early from a 401k has a very significant long-term impact.
Yeah, and I know, for example, just on past history, the last time that things dipped this low, I just put the 401k aside. I didn't even look at it. And I did, curiosity gets to me. So I did look at it and I saw how much it dipped, and then I just sucked it away, put it away, got it out of my head, and it rebounded. It actually rebounded even more so than what I had prior to, the downturn. So I would, on that question also, one of the other questions I get asked somewhere along that same sideline is, should I stop contributing to my 401k or maybe a retirement plan? They continue to pay into it. Should they stop that? Yeah,
that's a good question. A really good question. So I've received those questions as well pretty frequently. So the rule of thumb is if you have an employer sponsored plan like a 401k, 403b, those examples, and you have a match. Let's just assume your employer matches 5%. If you're still in a financial position to continue to allocate those 5% so you can get free money that your employer is giving you 5% free, that's free.
Yeah.
I would recommend to continue doing that. One, for the free money. Two, because the market right now is not where it was a few months ago, for example. Right now we're buying equities, or people are buying equities or stocks, international or US stocks, at a discount. So I use the analogy of going to Target, for example. When we go to Target, we see everything on sale. We might go for one thing, but we go to Target and we see everything on sale. We just buy more stuff.
That's me.
So, and it's human. It's very, very common. However, if we don't go to Target for one thing and then everything is triple the price, we don't say, well, you know what, I'm going to buy that, that, and that. So the same thing with investments. So we want to buy low and we want to sell high. So right now is a great time to continue to contribute to retirement plans, because we're buying equities or stocks at a lower price point, which means you'll have again, historically, you will have a longer gain through time.
Okay.
So very similar with you said, like other retirement accounts. Maybe the person was referring to IRAs or Roth IRAs, maybe a business owner, a SEP IRA or simple IRA. There's a few types of retirement accounts. Same thing applies. Those don't have a match.
Okay.
Those don't have a match from an employer. However, again, you're still buying equities or stocks at a discount. But just know, in order for someone to contribute to any type of retirement account, they do have to have income, like income that they worked for. So as long as they have income this year, that person should still qualify to contribute funds. So if they were let's just assume they were unemployed all of 2020, then that's a little different. I hope that helps there.
Yeah. So on the same token, if they have some extra savings money, they should, right now would probably be the best time to make some of these investments, correct?
That's a good question. I'm a firm believer for my financial planning practice and my clients. I do comprehensive planning for folks. So I don't only just focus on investments. I focus on risk management, wealth accumulation, and then wealth distribution strategies. So I'm strongly believe to first have a strong foundation into someone's financial plan or financial house. So a strong foundation would mean to solve your risk-based needs first. So if in your question you said, your comment you said, if someone has a strong savings there, they should go ahead and maybe start investing. I'd say normally, yes. However, we want to ensure that they have that strong base to ensure that, or to lower probability that if life throws curveballs, unexpected events occur in someone's life, that their plan and their assets are protected as much as possible. And we are not forced to liquidate assets prematurely. So right now, let's just assume someone has, maybe they have 1 month of expenses in a savings, and they say, hey, let me just go ahead and start investing. Normally, I'd say let's have 3 to 6 months of fixed expenses in a savings to weather a storm.
Yeah.
So my clients that that have a strong foundational plan, and most of them do, are very, very thankful that we did that, because now they see like, oh my goodness, this COVID-19 came and really shook our lives. However, they're not worried about having to withdraw from their 401k, et cetera, because we create a very strong foundation. So if whoever asked that question, or if anybody that's listening has questions about how to create a strong foundation, happy to talk to you. Complimentary conversation to address that. And then if it makes sense to invest, I would for sure let you know that it's probably time for you to do that.
Perfect. And I guess it just boils down to basically to what we've been talking about it. Look at your pros and your cons. How is this going to impact you now? And then how is it going to impact you in the near future, and then down the road? Because and to me, I know it's been great just being able to bounce things off of you, because sometimes I can't see past today. So you kind of help me broaden that spectrum and kind of get a little bit a different perspective.
Yeah. Yeah. And I
So
appreciate you being very open to ask these questions.
yeah.
And you can imagine right now, there's so much noise right now, like even on social media, the news, articles, and there's just so much information out there. It's really hard to identify what is the right thing for you individually versus just a general statement. And then just on real quick on the investments, what I find too is sometimes we are looking at investing as a short-term thing that we want to make a quick buck. I would challenge that way of looking at investing, just because when we invest, we want to look at like what's the time horizon of the person. What are we investing for? Are we investing for retirement, or are we investing to maybe or maybe we're investing to purchase a house in a few years, maybe let's just say 3 or 4 years, or maybe it's for college for one of our kids. So you can see all of those examples. One was 3 years, one might be 15, and the other one might be 30, assuming someone's maybe in their 30s to plan for retirement. The way you invest is going to be very different in each of those examples.
Yeah.
So when I have received questions where someone says, hey, where should I invest right now? I want to make quick money. Looking at investments for a quick dollar is not the best way to look at a portfolio. We want to remember the strategy. Why did we start investing? What's the purpose of it? And then also, if you do invest for a quick dollar, you're paying more taxes on that money too. So there's short-term and long-term capital gains. And anytime we make money, it's very, very, very normal. But the IRS wants its fair share. Uncle Sam wants its fair share. So we would need to pay taxes on that growth of those funds. And if we withdraw too early, so normally it's within a year, it's considered short-term capital gains. So you're paying more on taxes. So that will technically decrease your rate of return.
Yeah. Hey, Melissa, if somebody has never talked to a financial planner, they have debt, but they also have maybe some monies, or they make a decent income, could you help them kind of figure out what's the best way to pay off their debt, start their savings, or possibly even invest? I mean, is that somebody like that, would they benefit from reaching out to you?
Of course. That's a great question. Happy to have a conversation with that person. Many people have debt, and I help my clients. Either I help them create the debt repayment strategy, or I may connect them with somebody like maybe a credit repair specialist if that's necessary. However, I help quarterback the plan. So I would help. So it's like, let's ensure we have the debt repayment strategy, the saving strategy, and then what are we doing for the investments? And we might have a timeline. We might do everything all at the same time. We might just do one at first, but happy to help and just to provide some feedback there for sure.
And I would imagine everybody's case is going to be different, because I mean, I'm sure just like real estate, nobody's the same. One little thing can throw something into a different direction, a different pathway. I would imagine the same thing.
100%. I cannot agree with you more. It's everybody has a different way to define their goals, to define financial independence. Everybody has a different way of looking at that. So a recommendation that I might give you, for example, Amy, it will be likely will be very different from your friend, for example, because your goals are different, maybe income's different, maybe credits are different. There's just so many things out there that will say that the advice for one person may not apply for the other. So I think also what happens is that we oftentimes rely on our peers, maybe a friend or a family member or a coworker, for financial advice, and they give you the advice that they maybe know that works for them. Maybe someone gave them the advice. However, that advice may not be the best for that other person. And I've heard horror stories, unfortunately, where people make really long-lasting negative impact decisions because we leaned on someone that we knew and we trusted, which is fine, but I do recommend to speak to a professional about this.
And I agree with you, because same thing happens when somebody is interested in buying a home, even if it's a first-time buyer.
Yeah.
They say, "Hey, my friend and I make about the same. We have similar debt," but there's always something in their financial picture that's not the same. So, I would imagine, just like some of my amazing lenders, is to find what's the best plan for each individual. I would imagine it'd be the same thing.
Exactly.
Um,
Yeah.
I have someone asking, how do they contact you? If they want to seek your advice, connect with you, how would they do that?
Yeah, that's a good question. So I'll add I believe my information's on the group. I think there's a Zoom chat somewhere. So I'll add my information there. We can add my information on the Zoom call or the Facebook area. But I'll give my information right now. So if they want to write it down, so my email address is my name. So it's Melissa.Gonzalez. So MELISSA .Gonzalez, GONZALEZ @nm.com. So at N as in Nancy, M as in Mary.com. My office line is 619-230-8099. Again, 619-230-8099. For whatever reason I don't answer, I'm likely with a client or just away. But I'm not physically in my office. I'm working from home, but I still have access to that office line. But just leave a voicemail and we'll definitely give you a ring so we can chat.
Definitely. And if you, for any reason, you didn't write that down, you didn't have a pen handy, we'll put it out on the Facebook. But you know me, you know my number, you know my email, contact me. I know how to get a hold of Melissa. So
Great,
Melissa, we're coming up to the half hour, which I know I promised everybody we could get them off. Yeah, I know, too fast. Any lasting advice you want to give anybody right before we shut down?
Yeah, right, shut down. Yeah, so I'd say that the best thing to do right now is, if you have been impacted financially negatively, I'm happy to have a conversation with you. Absolutely no cost to you. And if I can answer some questions for you based on your individual story, individual needs, that's a win to be able to help. Or two, maybe you haven't been impacted financially. Many people are seeing value in being very proactive right now, more than ever, on ensuring they have a strong foundational plan and a strong plan just moving forward. So I do recommend to do this. We can see it right now that people are being impacted, and it's all about financial literacy, financial education. I strongly believe in this work, and how this can make a very, very life-changing financial impact in someone's life, which is really their life in general. So I would really strongly recommend to have a conversation either with me or another professional, just to talk it out. It doesn't hurt to do that.
Exactly. And friends, whether it's financial, whether it's you're interested in buying a home, a first-time buyer program, you need a handyman, a painter, whatever it is, I'm not just your realtor. I'm your friend in real estate, which encompasses everybody. Through this great career, I have been blessed to know friends like Melissa and so many other ones. So these friends are your friends. So if you don't have their numbers, you need to get a hold of someone, reach out to me. You know how to get a hold of me. You could, if you lost my information, just Google me, Amy Ruiz. I will pop up, I guarantee you. And I will more than likely know somebody. If not, if I don't know that person, then I'm sure in the pool of friends, somebody will know them. So thank you so much for spending your Saturday morning with us. I hope this was a benefit to you. If you liked it and want to see some more great just professionals like Melissa, let me know. Let me know in the comments what other advice you'd like to hear, and we'll make it happen. For now, friends, stay healthy, stay safe. If you need anything, if you need financial advice, reach out to Melissa. You need anything else, reach out to me. I look forward to connecting with you.
Yeah. Amy, thank you so much for putting this together. Really appreciate it. You can't imagine the impact that just a small video like this can do on in many people's lives. So thank you for doing that. I really appreciate it.
Thank you for being here. And thank you for
Yeah,
being of service. I
of course.
appreciate it, friends. I will see you soon. Bye.
Bye, everybody.